Okay, so I wanted to make a video here. I know it's been a while. I've been sick. I'm still kind of sick, or I have a sinus infection. I don't know what's going on here. I've had some pretty bad allergies lately, and it's kind of stuck with me. But I wanted to make a video here because someone in the community asked me some pretty thought-provoking questions, and it covers a lot of things that I wanted to make a video on. Plus, there's good questions in general, so I want to kind of get into that so that I can provide some good answers here. So basically, this video is going to be really long. I'm probably going to have to record it in multiple parts, and I'm probably going to be editing it because, like I said, still sick, so I sound pretty not great. But regardless, let's get into it. So I'm gonna uh, this video is gonna be essentially in three parts. So the first part is going to be um, how how I make my trades within the banner of relative strength, relative weakness. So um, I'm going to go in depth with that. I'm going to talk about the style that I like to use. I'm going to talk about what is the specific criteria of how I choose the stocks that I get into. I'm going to talk about the rules I have for entry, the rules I have for exiting. I'm going to talk about well, that's all I'm going to talk about for that. But that's going to get pretty in depth. Um, then I'm going to talk about in my journey of learning how to trade, um, what were some moments that were key moments for me that really kind of changed uh, the direction I was going in and what brought me to basically where I am now. And finally, I'm going to conclude the video with how I view trading as a business, a job, a career, and what it means to me, and I uh, how I basically look at it on a day-to-day basis, and from maybe more of like a broader philosophical perspective. So let's start with basically how I trade. So I would consider myself mainly a swing trader. Now, I find that a lot of people have different definitions of these things. So I'm going to I'm going to be very clear in how I define this. So to me, someone who swing trades is someone that takes positions with the expectation that they're going to be more than likely holding it for more than a day. The reason why I define a swing trader that way is because, well, let's think about the other distinctions in trading, the other like popular distinctions. So we have a day trader. Well, what do we consider day trading? I mean, it's day trading, and you get 4x margin on day trading. So why would we consider anything but opening a trade and closing a trade to be a day trade? I mean, that's how the SEC defines it. Um, if you have an account below PDT, uh, what is it, 3 day trades a week or something like that? That's uh, that's how they define it. So why wouldn't I define it that way too? And then scalping would be to me taking maybe like a 10-cent move, something very small, maybe like up to like a 30 or 40 cent move, depending on the size of the stock. Like if it's $100 or $200 stock, or maybe $200 stock, maybe $1, but like something around there is what I would consider scalping. So to me, swing trading is taking a trade with the intention of closing it not today, or being open to that at least. So why why did I originally settle on swing trading? Well, there's a lot of reasons. So at some point in my journey, which I'll get into a little bit later, I realized that I was a lot better at being patient than I was being nimble. Um, Let me see if I can give an example on that. So, um, let me see. Let me look at one that I closed a different day. I'm looking at my journal right now. I'm just trying to find something where I closed it. Let's look at Okta here. I just want to see what it did. I opened that on 10:10. I closed that on 10:11. Okay, here's a good example. So on Okta, so I entered that trade on 10:10 on this green bar here. I was looking for, I believe somewhere around here. Maybe, I don't remember where oh, no. I think I was looking right here. Close to 87. I was looking for on that one. Now, so just to give you an example here, on this day, the high was 85.9. So, a lot of people here would say, okay, maybe like more of a day trading mindset would be entering on a pullback. So let's say, and this is all hindsight. I'm not a big day trader, but like let's say, okay, bounce off VWAP. We'll try to target the high of the day. Maybe you enter in off one of these green candles. You look up here. That's I feel more of like a nimble kind of strategy, and I found that I'm not the best at reading intraday price action. So sometimes I'll try to target something like that because, I know technical analysis extremely well. So I know like what I'm looking for, but the fact is it's 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 really not easy to to what's it called? It's not easy to target exactly what I'm trying to do here. What I've found is I'm a lot better at like reading a daily chart and seeing, okay, we have a breakout above the previous day high, which is where I bought it. And then let's target this area, which is kind of acting as previous resistance here. You see the tails. I could be more aggressive and I could say like, okay, let's target this level. There's more tails up there, which as you can see based on the chart, it pretty well acted as resistance here, combined with a market pullback, of course, which most definitely accelerated the pullback here on the stock. But um, I went for a little bit more conservative of the first candle here that started showing some resistance off this level, and so I just targeted the close of that candle for my target. So that's an example of where you know there is an opportunity here to take like a nimble day trade, but I'm just I'm just not as good at doing that as I am at saying or reading the price action on a daily chart and then saying, okay, I can wait for it to hit the level I want it to hit. And that's why I'm a swing trader. A lot of people talk about how they really struggle with being able to have the patience of waiting for these setups to happen because this definitely takes a lot longer to happen. But it for me personally, I've found it to be a lot less stressful. Um, and for some people, it's the exact opposite, and that's why they're far better at day trading than I am. So that's why I swing trade. Now, what constitutes a good trade? You know, so what I look at the most is I look at the daily chart, I look at the 5 minute chart, and I look at volume as well. So let me pull this up here. Let me pull up the daily chart. Uh, I don't know if it's going to show my trades. I hope it doesn't. Okay. Well, for some reason I don't have volume on this. My uh my thing reset, so it screwed everything up. Let me just put volume on there real quick. All right. So basically, what I'm looking for. This is annoying. Okay, maybe if I click it. Okay, yeah. So what I'm looking for is I want this yellow line to be greater than 1 million shares. So, obviously this is Google. Of course, it's going to be, you know, greater than 1 million shares. But like, you want to see it on everything. Like even we just type in some smaller companies like UPST 7 million, um, United Healthcare, I think is that this company, 2.7 million. Here, hold on. I'm sorry, this is scaling wrong. Automatic scaling. There we go. That's what we want to see. Okay, 2.7 million. What's another company? FSLR, 1.9 million. So basically, I'm looking for stocks that have greater than 1 million average volume on the daily chart. Because when you get lower than that, um, you're you are risking you run the risk of being in companies where there's so few shares traded, um, that some like rich person can come in and just screw the whole trade you're in. So, you know, uh, let's say you're in some company that trades typically 500,000 shares every day. Like that's the average. So if that's the average, that means, there could be even days where there's 250,000 shares traded. So that's not a lot. Um, so let's say you're in a position short. Um, and an institution sees that and they go, "Oh, we just got a report of this, blah blah blah," and it's like, information that isn't really publicly known yet, and they say, "Okay, based on this research report, we're going to buy 5 million shares right now." Well, what's going to happen to your short? I mean, you're going to get fucking destroyed. Like the stock's going to jump like $20 maybe. Like I don't know if it's going to jump that much, but it's going to jump such an insane amount that you're short. I mean, it'll make you want to cry. Like it'll burn you so bad that it'll make you want to quit trading forever. So why even put yourself in that position to begin with? Um, typically people don't just trade shit stocks. Typically what I see happening is they see a company, it's moving good on that specific day. Like let's say it's moving with momentum because there's some kind of news catalyst. Well, anyone with a huge amount of money can choose to take a position one way or another, and depending on how you're positioned, that could greatly affect your position. So anything can happen. So that's why it's best to trade um, these stocks that have over 1 million shares traded, because then everything's diluted. Like no one's gonna short squeeze the hell out of you on Google. Like if Google, or let's use a better example, like let's say Target, right? Target's been like downtrending for a while here. Um, no one, no one has the amount of money because, like, look at this. What does that say? 5.2 million shares traded on average every single day. Yeah, no one's gonna short squeeze you here. Like, okay, getting back to the video here. So, I was talking about Target. I was mentioning how no one's going to short squeeze you on this. So you get the idea with that, right? The volume's really important. You can't fuck around with that. It's super essential to have a hard limit on saying nothing below 1 million shares, because 1 million shares is pathetic. So if you're trading anything below that, you're gonna get screwed. Um, so basically, in order, uh, in order for me to determine like what's a good trade, I'm just going to give some examples here. So I'm going to go through all my trades that I took in October so far, not including the ones I took today because I haven't entered them in my journal yet. So um, first trade I took this month was McDonald's. Shorted on 10-2. Let's see where that is. 10-2. You know what? Let's bring up bring up this chart because I think I have more indicators on here, so I can look at it easier. Yeah, I have the SMAs here. So here we go, 10-2. So what's happening here, right? We have a small compression here where it's showing maybe a little bit of support. Huge red candle through that support. This is very clearly weak. So at a glance, you can see this is a breakdown here. Technically, that's a good setup. Breaking down on a compression. Let's go to the next one. American Express, 10-3. I shorted it with puts. Another breakdown. Nice trade. Looks like I got out of it same day. So that was a nice trade. And I'm just going to go through my my entry like at a glance how I'm telling it's good. So if this is what the stock looks like, if it's breaking down like this, this is a breakdown below levels. You look at this level. Okay, we're already below that one. You look at this one, we're breaking down below that one. It's kind of what we want to see. We want to see something where you're thinking right, or this is how you should think. So institutions control price on everything. They're constantly trading, trying to position whatever. I don't really look into it that much. But the point is, these massive institutions, JPM, Goldman Sachs, Morgan Stanley, they're all trading billions of dollars in the market every day. Maybe not billions, whatever. Hundreds of millions of dollars in the market every day. Maybe billions. I don't know. So they want to move these stocks where they want to move them. It's as simple as that. If you see something moving on volume, making a significant move, I'll show you what wouldn't be a significant move. Anything in here, anything from August 16th to September 13th, I literally could not, or I literally could not care less. Yeah. This is garbage. Shouldn't even, if you pull up a chart and you see this, you see that, you see this, you know what? That one you can kind of think maybe it's a good trade, but the problem being is, they're tiny candles and, you need some confirmation. So that's why when I looked at it on this day, that looked pretty damn clear to me. I shorted it, I made money. ON. That was also on 10-3. I took a few trades on 10-3. So ON. Shorted it there too. Looks like when I shorted it, it was below this line here that connected these two tails here. Reason why I shorted it, simple as that. It was below it. I ended up closing above it, but the market was weak at the time, so I held it. But that's why it looked good at a glance. I'm going to go back through all these trades and explain very specific requirements, but I just want to explain how I picked these up instantly. So let me just move this actually. So this is what it looked like on this day, and imagine it's below there. Imagine that flat bottom right there is below this line. Looks pretty damn good, doesn't it? Yep, that's why I took it. ALB, also I took that. I bought puts on 10-3 again. 10-3 is right there, so look at it there. You got stacking bars here. Anytime you have stacking bars, that shows consistent selling pressure. That's a pretty high probability setup, and that's something you want to pay attention to. Looks like I profited the next day. Yeah. Triple M. I took that puts on that on 10-4. Let's see here. 10-4. So let's see. I just want to make sure I'm going to the right day here. As you can see, this selling pressure that was pretty heavy since this gigantic red candle on September 13th. It's very consistent, very heavy. I'm not even exaggerating. Any of these red candles that close below the previous day's low is a good shorting point in combination with the market, because then you're giving yourself the highest probability. Of course, in hindsight, you can say oh yeah, all of these red candles you could have shorted at the end of the day and you would have made money. Yeah, sure, definitely. But, you don't really know. Well, you can never really know if it's the highest probability setup, but there's a lot of things you can do to make sure that you have um, probability in your favor, and that's why like I wasn't short all these days. I'm sure there were days where I was short between September 13th and then, um, but you know it's best to do that in combination with the market. But anyway, you know, I hope this chart should, you know, it should be self-evident why I thought this was a good short. I would say like 10 stacked reds in a row is kind of maybe a little bit of a selling pressure sign. Um, Looks like on 10/6 I took Google calls. Oh yeah, I had a couple days of taking calls here. Market must have been strong. We'll revisit that. October 6th. So, you know, when you look at this here, looks like I closed it same day. So, what am I thinking here? You know, so here's what it looks like when I took it. So we got a break above. So this was the gap down. Clearly, we filled that over here, and then we had a break above this compression on volume going. Instead of overlapping, we've got it all the way above these highs, and this candle did that a little bit here. This is definitely another good candle on October 4th. Um, I'm certain, considering on October 4th I was taking a short instead of a long, that the market was looking bearish on October 4th, which is why I probably didn't take any long position on Google on that day, because this is definitely a good setup here as well. So, I waited for the market to confirm, and then on October 6th, clearly I felt the market was bullish enough to take a long. I bought the calls, profited same day, probably was targeting this area up here. So I hope you can see instantly why that's a good trade. Sometimes some people say that these long candles act as a gap in and of themselves. I have observed that anecdotally. I haven't done enough testing, but I have enough experience where I kind of trade them like that anyway. So yeah, it was a good trade. Next trade I did was TTD. That was the same day, 10/6. Okay, so the reason why I was in this one, typically I don't like to take things when it's not really above any kind of level over here, but we have an SMA. We've got it blowing through an SMA. This is the 50 SMA simple moving average. These levels are significant points of support or resistance. They're typically tested. It's not very evident on this chart, at least in the last month. But as you can see over here, this candle opened here, attempted to test that gap, did test that gap through the SMA, rejected extremely hard off from it, and then closed all the way down here. And then we have here, this long candle opened here, attempted to get up to the SMA, did not close above it. Same thing with this candle, attempted to get above the SMA, closed right here. This candle opened above the SMA, tried to get some traction, sold off below it. So you can see what I mean, that this is typically a good support or resistance level. So, the fact that it broke above this compression, the fact that it has held support, I saw this line down here, saw this compression. If it wanted to go lower, it had every opportunity to. It did not take that opportunity. It broke out of the compression, broke above the 50 SMA. I said, you know what? Okay, I probably targeted something over there. And, as you can see, boom. It was a nice trade. I got out of that trade on 10/9, which was, I think 10/6 was Friday, 10/9 was Monday. Okay, so meta calls on 10/6. Okay, so same kind of deal here as TTD. We have a long compression. We've got the 50 SMA acting as a really significant resistance level. Tried to test the 100 here, bounced off from it again, is consolidating majorly. This means a huge consolidation on a huge stock. Breaks above it on volume. I take the position long. I close it the same day for $1 profit. Continued to go. I could have swung it, but I had the profit I was looking for. I got out. W day calls on 10/9. I think that was the last bit, or no, that's the second last calls I took so far this month. So, W day on 10/9. Okay, so I hope you can see here why I took that. So, 10-9. We've got a huge, massive, gigantic, insane gap down on September 28th, which attempts to immediately try to fill the gap, immediately sells off, bounces off the 200 SMA with a gigantic candle on 10-6. Then 10-9 breaks above that prior high from September 29th, recent high. That's a good trade. It's breaking above compression. It's got room to the 100 SMA. I said, you know what? Fuck it. Let's do it. I probably targeted somewhere around here because I do not trust this market. So I did not feel like shooting for the fences here. You know, if this was a bull market, I'd say fuck it, give me that 100 SMA, give me all the money. But you know, we're not in a bull market, and this market actually really sucks. So I took a more conservative target, and yeah, uh, I don't 100% recall if it was here, if it was there. I just remember that when I got out, I noticed that. Oh, you know what? I think I actually might have used a cloud line for that. Yeah. I never do this ever. I never do this, but I did use a cloud line for that one. Because I was looking for some justification to take a profit. Um, because I just had a feeling it was not getting that 100 SMA with the market being how it was, and you know, obviously, it still could. And I take the contracts I take them usually like a month out, so they have time to work for me. But if I can find a reason to take a profit and it's still a really nice profit, I kind of just want to take it. Um, you don't want to be. This is like this is something that's a constant battle in trading. Is you don't want to be scared, right? You don't want to say like, "Ooh, I have a profit now. Let me take it before it goes away." You don't want to say that. Um, but you also don't want to be greedy, where you say, this is my target. Fuck everything else. This is my target. Like, no matter what, I'm sticking to it. Like, and then, you can like delude yourself into that mindset, which can be helpful when you're learning. Genuinely, it can be helpful when you're learning on paper with one share. But when you have like a few contracts on a position and, let me see here. Yeah, I was up $3.25 on my contracts. I mean, that's a lot of money. Like, I'm going to take that. Um, and it was a really nice gain, and I'm totally happy with taking that. It very well could, bounce off this level like it is today, and then test that maybe sometime next week. But then I'm sitting with these expensive contracts in my account that's just sitting there. Versus, granted, I'm not finding a lot of trades today. That's why, I mean, you can see here on my screen, it's 12 noon, and I'm making a video instead of trading. Well, that's because I I've already made some money today from some swings, and I I'm not really finding anything I like. It's still in its range. It was above it earlier a little bit, but the price action is pretty pathetic. But don't let me get on another tangent here. Um, Getting back to the topic at hand, the last call I took this month was Okta. I took that on 10/10. So, as you can see here, huge gap up after earnings on August 30. It's a big run up, big pullback. We've got three SMAs here, had to bounce off one of them, right? Gigantic green candle on October 6th off the 200, the 100, and the 50. We got a stacking candle on October 9th. Then I say, oh, you know what? I'm going to get it on October 10th. I believe I took profits right here, yeah. Because reason being, did I already go through this trade? It feels like I did. Reason being was that, these tails up here, that's kind of showing that this is an area where sellers are coming in and they're defending it, that clearly don't want it to go that high. So I took a little bit more of a conservative approach. I said, you know what? I'm going to take it right here where this first candle sold off from. I could have taken it up here where multiple candles were. Makes a little bit more sense from a resistance perspective, but like I said before, this is a dangerous market, and I'm trading a little bit more conservative. Even in 2022, I was willing to be more aggressive with positions like that, or I should have been. But this market is not forgiving. So if you have a setup that you've confirmed is a good setup, you got all the stars to align for you. You know, it's it doesn't really pay off incredibly to be greedy. Um, there's times in market cycles to be greedy, but not in the bear market we're in right now. That's definitely not a time to be greedy. So I have no problem taking profits a little bit earlier. In the future, I can take like $2, $3 profits and double and triple my returns, and that's fine. But why not take what I can get now? Because you're not going to get a big, huge gain. Like a couple years ago, 2021, I was first starting with this system specifically, and I sucked at it, but I still made money. How? Fuck if I know. But it was a bull market. It was a bull market that was starting to wind down. I could definitely feel that because I was trading in 2020 as well. Different system. Um, but 2021 definitely was winding down for sure. The moves were still way bigger than they are now, though. I mean, you get in a stock and like 2 seconds later you're up $10. I mean, it was silly. But that's a bull market, and when that comes back again, I think the people like me who have been very patient and very diligent in understanding how to trade this market are going to um, have incredible success in a bull market. But anyway, I have. I'm just gonna cover one more trade, like this is the only one I have closed on here. Um, I have two more I took, but they're not. Well, one of them's closed, but I haven't entered it in yet because I closed it today. But let's look at FTX puts. That was basically a day trade on my part, and reason being, was pretty simple. So, let me pull it up on TC 2000. It looks a little bit more clear on there. So, as you can see here, what is happening with FedEx? It's in an uptrend, right? It's pretty undeniable. I mean, sure, it broke the last higher low that we had. Higher low, higher low. No, this was kind of a downtrend here. I don't know. You can draw lines wherever you want to draw lines, but if you look at the weekly chart, it's pretty clear that it's going up. So, it very well could just completely crash and continue going down. But I wasn't incredibly inspired that that was going to continue happening. So, I had a $1 gain on my position. I just took it. I figured why not? Take the money and run, right? So, um, reason that this was a good trade, just right off the bat, look at this, right? 100 SMA, attempts to get above it, gets smashed down hard on volume, breaking down through that line even. This point right here. So, thought it was a good trade, took $1 on it, move on, right? All right, so those are some examples of some trades, and I hope that you can see. Um, I hope that you can see why, just off the top of my head, or just at a glance, they're a good trade. If not, feel free to ask questions and I'll reply, or I'll even make another video clarifying because maybe I'm just not seeing like what's complicated. Like to me, when this breaks down like this, it's pretty clear that this is a pretty damn good trade. I mean, this is a gigantic red candle on the daily chart here. And I do look at the 5-minute chart, but I just try to make sure it's consistent with what I'm seeing. Like, if I'm seeing a giant red candle like this and it's all price action like this, like the whole day, then I'm like, oh, maybe not. But if it's, showing this, which obviously it did, like it has periods of stacking red candles. That's what you want to see because that shows you that it's going to continue down, and you're going to get the kind of price you're looking for in a reasonable amount of time. You don't want to be sitting here all day. You don't want to take a position, or I mean, it happens, right? You can't control things, but you don't want to like intentionally take a position that you know for a fact is just going to take 5 years to go into profit. I mean, what the hell is the point of that? You want to try to do things that is going to give you the best advantage in the trade. So, my first thing I always look at is the daily chart, um, and then I look at the 5 minute. So that's a good transition into, um, you know, my like basically my rigid rules here. So first, I'm going to go into basically how I decide to enter stocks. So that's going to be necessary to look at the daily chart on SPY here. So let's zoom in a bit. So I'm just going to go over like the last however many days, and I'm going to tell you exactly what I did on these days without even looking at my trades. So here we have a gap up. So what that means is I'm waiting. I'm waiting to see what happens. I'm waiting to see if it's a gap reversal or a gap and go, because two very different things will happen. If it's a gap and go, I'm going long. Why? Because what I'm always looking for is I'm always looking for SPY to be above the previous day's high or below the previous day's low. If SPY is above the previous day's high, I am only taking longs. Only. There are very rare exceptions, and I try not to make them because typically they don't work out very well. So I'm only looking for stocks to go long if it's above the previous day's high. If it's below the previous day's low, I'm only looking to take shorts. Like I said, very few exceptions. And I very much try hard not to make any exceptions, because if I'm making an exception, it better damn well be the best fucking exception that's ever existed on the planet. Because I have these rules for a reason, and I have tested them to hell. They work, and are they work for me. They work for my system. You know, I know there's others um, who are very good at day trading, which is a completely different animal. But this is my swing trading rule set. So September 20, we had a gap up. I waited, and I can be confident in this because I do this every day. So I waited. Gaps started getting filled as soon as we're in this range here. We're in the range of the previous day. I am not taking a single trade. When we broke down here, I know I went short. So I can look here, September 20. I can see it right in front of me. I've got the journal. I took a SPY put, and I took a short position on TSM, which I closed the next day. So there you go. What did I just tell you? I told you, I guaranteed you, I only took shorts on this day. And yep, that's what I did. I only took shorts. Next day, we gapped down. No attempt to gap fill. It was a gap and go down. So only short on that day. A little bit gap up. Next day, attempted to go up. That's no man's land for me. Went down, took some shorts. Gap down. I wait, see what happens. It started filling, filling, filling. I probably took no trades that day. Let's see, September 25th. Looks like. Oh yeah, I just took something which I closed for break even because I realized I made a mistake. So there you go. September 26th opens, right at the close base, or right at the open basically. So that's a pretty significant gap down. Doesn't even attempt to fill it. Take only shorts on September 26th. Let me look. Yeah, I only have puts on that day. Um, Next day, same thing. We're not anywhere near above the high, so guaranteed I only took puts that day. And yep, I did. This day, you would think like, hey, downtrend. Nope, I took long on September 28th. Took calls. Yeah, I took one stock and traded calls on it. I closed it the same day, and it was a nice gain. The 29th, this is a pretty large gap up and then fill. So, you know, hold on. Okay, so I mentioned the 29th. Let's go rapid fire through this because, I don't want to waste your guys' time. And I realize I've kind of been lollygagging here. So, next day, a little bit in the range below it, we dipped below it. According to my personal research, it does not matter if it comes and closes up here. If I take stocks down here, they generally profit. Next day, move down. Clearly, did not get above that range. Is below it, short. This day, inside day. No trades. No trades. Long, long, long. No trades. No trades. You would say, like I said before here, you can take a short here. It's debatable. But it's debatable, but I wasn't feeling confident, so I did not. This day, I did take a short. I took 2 shorts, or I took 3. One, I profited that day. That's the FTX short I talked about earlier. And then I had Baidu and TXN. Baidu, I profited this morning. TXN, I am still in. This one, today's candle, October 13th. It got a little bit above. We can even pull up the 5-minute. That's even easier to look at because I have this line here. It tells me where the previous day's high was. You can see it dipped above here. I did not feel particularly comfortable. So, that is one of my major rules. I go long when SPY is above the previous day's high. I go short when it's below the previous day's low. That is a pretty significant rule I have. I generally do not break it unless there's some insane exception, but that's a significant rule I have. Another rule I have is I try to line up my entries with 1 OP. So what does that mean? That means if I'm going long, I need to see that deep cross. If I'm going short, I need to see that bearish cross from above. So let's just pretend that SPY doesn't look like how it looks, but we've got a bearish. You know what? Let me just find one. It's easier to show. Let's see. 431.23. I just want to see if what I'm looking for works out here. Here, what day does it look very clear? Because I want to show a cut and dry example. This stuff gets complicated, but I just want to show easy examples so that it can be understood what I'm trying to do. Let me look at October 6th because that's probably got a cut and dry example of this. Because when you can't rely on 1OP, you kind of need to use your experience a little bit more. And I understand that, not everyone watching this video is going to have that experience. I kind of want to explain using a good example. Come on, show me what day it is. 4th. It's probably the 5th. Okay, 6th is the next day. Okay. All right, so here we can see opened, gap down, and then filled it, and then went crazy. High of that previous day is around right there. So I'd be looking to enter in longs right here, which is what I'm sure I did. This is a very nice move. And why do I time it with this? Well, Pete created this 1OP indicator. It's right all the time. I mean, if you want to look here, we got a cross down here. What do? We move down. We got a cross up here. What do? We move up. We have a cross down here. What do? A little bit of a dip. Doesn't really move. That means the next cross up is going to be good. What's happened on the next cross up? Oh, it's good. We got the cross down here. Pulls it down a little bit. Down a little bit. We got a little bit cross up. Not really valid, though, because both lines don't go up. So it's kind of a no man's land. And then, yeah. So, you get the idea. I'm not here to promote an indicator. I don't really care one way or another, but I know it works, so I use it. That's the bottom line. So that is another rule of my trading. I try to line up my entries with 1 OP on the 5-minute chart on SPY, no matter if it's a stock or not. One thing Pete told me when I was early on learning his method is he said, our goal is we are trying to time our trades with SPY. We're looking to trade SPY. but we're not trading SPY. We're trading stocks, which have relative strength and relative weakness, which means they have institutional involvement. Therefore, if I'm trading a stock that's stronger than the market, what does that mean? That means if the market takes a dip, the stock is likely to go sideways or even go higher. If I'm trading a stock that's weak, that means if the market bounces, the stock is likely to go sideways or continue going down even. Now, I internalize that because one thing I learned was these guys know what the fuck they're talking about, so I'm going to take everything they tell me and I'm going to make sure that I listen to it. And that's what I do. So that's why I time it with SPY. So another entry method, or another thing to consider for entries, is making sure that there's no lines. So Pete here on the platform has automatic trend lines. You can see this on Google here. Before I was waiting to make sure that this did not bounce off from this line, and as you can see it did. So I didn't take the long because it didn't get above this line. That is another thing I always look for. I always these automatic trend lines that Pete has on the Option Stalker Pro platform, I use them as fucking gospel. I make sure I always pay attention to these lines, and I will not take a trade if it's not above this line significantly and confirming above it. Like it needs, I need to know that it will not touch that line ever again. So another rule, and this is the last major rule I have for entries. So we're actually going to go to TC2000 for this one. So here is my rule. I do not swing trade when SPY closes inside the cloud. And it has to close outside of the cloud significantly. That means on this day right here, September 14th. Here, I could show you how. See that? See how that little corner right there is outside the cloud a little bit? It's devious. So I can tell you that I did take a swing along on this day. It did not end well. That is why you must have a convincing close outside of it. Why do I use the cloud? Well, two reasons why I use the cloud. Let me explain. One is the concept of the cloud just makes sense. What is the cloud? The cloud, or Ichimoku cloud, is an indicator that basically uses many agreed upon support or resistance levels and just throws it up there. So what that means is SPY is likely to bounce off this level. SPY is likely to bounce off this level. That's basically what it means. So if SPY is above the cloud, well, it's likely to continue going up. SPY is below the cloud, well, it's likely to continue going down. And what happens if it's inside the cloud? Well, that's just a chop zone. So that's why I made the rule. If SPY is in the cloud, we don't take swing trades because I can't be sure of the direction. Because, let me show you this. So let's say you get short here. Okay, we go down one day. Okay, we go up. Oh, we're getting short again. Or not really, because it didn't go below the previous day's low, but let's say you're getting long here. Okay, the SPY goes up. Okay. That's all well and good, but did your stock go up enough to not get screwed here? Probably not. And then now we're short, and oh, we're bouncing again. And it's just so annoying. So, in order to not partake in that bullshit, I made a rule, which is no swing trading inside the cloud. So, as you can see, based on this chart, that doesn't really happen that often where it's stuck inside the cloud. You got a couple days here. You got a couple days here. This is the daily chart, by the way. That's what it needs to be on. You have one day here. So it doesn't happen that often. But I tested this across nearly 2 years of trades. And it was kind of mixed results. I will not lie. But what it wasn't was negative results. It did decrease profits sometime in 2022, but it avoided so many losses in 2023. So I don't know. I'm kind of rolling the dice with this rule. But overall, the concept of it makes sense to me. So I feel better doing it. And it's based in logic, it's based in reason. And my results are a net positive. It's not like I lost money um, because I wouldn't take certain trades or whatever. Well, I guess theoretically I did, but um, it didn't result in a negative P&L, which is really what I was looking for. And for me, September of this year was a rough month because of a couple of reasons. Because I screwed up on my rules, I let myself get a little loose on them, and I destroyed an 8-week win streak. And yeah, it wasn't pretty. September was not a good month. Or was it September? No, 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 not September. It was August. August was the month that was bad. Yeah, September was fine. There was no problems with September. August was the month that was bad. My brain's not working. I'm still sick, clearly, because I literally just paid myself for September. Um, no, it was August. August was the bad month. Um, anyway, those are all my rules regarding entries. Very, very strict. Like today, I've taken no trades, and I'm not sweating it either, because I already have other things working for me. I've got stuff from Friday that I profited on. So one stock from Friday I'm holding. One I already profited on, so I'm chilling. I don't care. Um, Now, exit requirements. This gets a little bit trickier. So here is when I'm going to go through the trades again, because I'm going to show you how I exited them. Or I'm going to do my best to, because I didn't write down my targets. Um, but I can show you as best as I can. So McDonald's, I shorted that. Actually, you know what? Let me explain first. I can leave TC 2000 up. Let me explain first what uh, what my multiple different exit strategies are. So I have borderline three different strategies for choosing profit targets, and I have one strategy for exits. And only sometimes do I make an exception and go off my feelings a little bit, like of the price action, but that statistically always seems like it's a really bad idea. And historically, um, there's been times where it's worked, but then there's been other times that has not made up for the times where it's worked, where it has not worked, which is why I'm currently phasing it out. I'm not as good of a trader as you know, the guys in the option stalker room, Pete, Harry, Dave. So I'm still, smoothing out my trading right now. I'm not at the top yet. Um, Still work in progress. So I'm going to explain my three profit taking methods. One of them is very simple. One of them is I'm going to look at a previous support or resistance level and call it a target. So let's say I was short here on August 16th. I'm just making this up. This area acted as support, or even this area acted as support, because it bounced off from it at the end of the day, bounced off from it here. It's even more significant. Maybe I'd put it up a little bit higher. Conveniently, that's also right above the 200 SMA. Like I said, this market is dangerous. I do not trust it very much. So I don't trust that these things are going to test SMAs. They're usually just going to say fuck you and move on, or not, but you never know. And I'd rather take my profit when I can. So right here is a level that I would consider a previous support level. If I'm short here, I'm targeting that. That is one of my methods. That is how I just look at previous support or resistance levels and I say, okay, that's a good level to call a target. That's one level. That's one method. Actually, there's four. I'm going to add another one in a second here. And okay, so that's one of my methods for exiting a stock, profit taking. Another one sometimes, which I use, is this method. So Pete has these automatic trend lines. I mentioned them before. If you see it breaking through an SMA like this, let's say, I don't want to like just pretend that it's doing something. Let me see here. Let's pull up the FDX. Okay, this is a good example. So this line here is connecting through these lines. This is a big red candle here. I could say that I want to use this line as a target. Clearly, I did not do that, or I would have mentioned that earlier. Well, it's not even there yet. So I mentioned earlier why I didn't do that. I felt that the FDX or the FedEx chart overall is bullish, so I really didn't want to push it in that regard. But that's another method. I like to use these automatic trend lines sometimes as signal to not get in a trade, sometimes as a signal to exit a trade at that point. Even in one of my previous videos, I mentioned where someone took a trade. I don't remember the stock symbol. I'd look it up right now. Where they took a trade intraday and were targeting one of these trend lines, and sure enough, it did bounce off that line, but they were out at the line. I mentioned in the video. I think that that's what they did, and he actually messaged me and told me that that is exactly what he did. So, these lines can be a good place to know when to not get in a trade, or a good place to know when to get out of a trade. Another method I use, which is what I think I did on McDonald's. This is something I'm not sure is based in reality. Now, that sounds really ridiculous, doesn't it? Yes, it does. This is just something I kind of came up with um, to help me when I'm trading something in a free fall. So, as you can see with McDonald's right now, there's no recent, levels over here. Like this is April. When's the last time it was down at this level? We've got October of 2022. I don't really care what it did in October of 2022. Unless there's like a trend line that's connecting multiple points across multiple years, I really don't care what it did in 2022. So instead of looking back and like trying to use a magnifying glass to like look all the way back over here, like, oh man, I don't even know what the fuck I'm looking at. So instead of doing that, I'll say something like this, which is what I did. So on McDonald's here, October 2nd, I look at a random average candle. So let's pick this one. I look at the high, 266.30. I look at the low, 263.13. Okay, I call that about $3. And I'll say, okay, based on wherever I entered, I'll sell once the stock price is $1.50 down from wherever I bought. Or, well, I bought puts, but wherever I shorted. So I take half of the ATR of a random candle I would look at, the high and low. So it's $3, call it $1.50. If I was trading it, let's just say this is 2021. If I was going short here, I would say, okay, where's a random candle? It's a random candle, high, low. Let's call that $2. Let's call it 1. So wherever I go, dollar down, I'm cool with taking profits. That is how I do it when we're in a free fall, nothing around, nowhere to base it off from, at least not close. I just do that. And I've back tested that in my trading. Like I always say in my trading, I don't know if it'll work for you. I have no clue. But I know that for me, I like doing that. It's just one of my ways of doing things. I find that it works. And it often gives me a good price. And, sometimes the stock continues. And if it does and it confirms, maybe I'll get back in and sometimes I won't. And, I don't really care. I'm sure I'll find another stock that It fits my criteria. I'm not really worried about that. Um, and then I said earlier, I think I even mentioned I use cloud lines. I've never done this ever. But I used cloud lines the other day to pick a target, which is crazy because I never do that. I think it was on W day. So I said, okay, here's a long line. Hits that level, I'll get out. That's what I did. That's very open to interpretation. I don't know that I would recommend that. Um, I think with my expertise, I can kind of do whatever um, within reason, and that makes sense. But that is something I did. But I'm only saying this for educational purposes, for if you're curious of what I do sometimes. But I don't know that I would recommend doing that at all. But that is what I did one time. Now, exiting for a loss. It's very, 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 very important that you exit for a loss when you need to. Not when you don't need to, because that is the worst thing you can do. But when you need to, it is so important to exit for a loss. Now, a lot of people will talk about how they have a high win rate. And that's fantastic. It's fantastic that they have a high win rate. But what do you find in a lot of people that have a high win rate? They're bag holding. They've got all these stocks that are down huge, and they will not sell them. You cannot do that. That is so deadly. I cannot even express to you how deadly that is. I don't care how much fucking money you've made. Maybe you made $30,000 in a short period of time. Let's say you made 30 grand in 3 months. Crazy money. You made close to the average salary in the United States in 3 months. Um, but you're bag holding 50 grand in losers. Yikes! And I say these numbers because I know there's going to be someone who watches this video at some point who thinks they're a genius because their win rate is so good. But what about those stocks that you haven't sold yet for a loss? How are those doing? Very, very, very dangerous. Now, up to Friday, I had a 100% win rate. That's crazy. That's not my typical. I will say that. It's usually high, like upper 80s. I do not know how I've managed to have a 100% win rate up until Friday. I did take a loss on something today. I took a loss on a day trade today for like $60, so it's fine. Not anything crazy, but that definitely dented my win rate for the month. But I had a 100% win rate up until Friday, with every single position I opened this month closed, besides the ones I opened on Friday. One of which is closed, one of which is still open, and the other one I closed on Friday. So I'm going to show you when I decide to take a loss. And I'm going to use, excuse me, I'm going to use some examples. So, Microsoft. Microsoft is a stock I took a loss on. Here's what happened. I shorted it on September 26th. My goal was, I wanted to see 309. You're going to love this. What did I see? What's that low? 309.45. 309.45. 45 cents from my target. Lovely, isn't it? Happens to the best of us, right? But here is how I choose when to take a stock for a loss. I use LRSI. I Don't really use LRSI a lot, logarithmic RSI, but I use it here because here's why. I think relative strength, relative weakness is an arbitrary concept, right? Now, as traders, our goal is to get in a stock when it's strong and get out of it before it becomes weak, or even before it becomes neutral. So we're trying to take fairly quick profits. We're not trying to scalp, but we're trying to take quick profits. Now, if you look at a stock, you can argue that it has strength over a significant period of time. Now, can you hold it for that long? Well, I can tell you this. If you're trading options, you're trying to leverage, you're trying to make your money work for you, trying to make, let's say, your account balance only allows you to take a certain number of shares because, stocks are expensive. So then you turn to options because you want more leverage for your money. That's what I'm doing currently. That's what a lot of people do. Well, the longer the expiration out means the more expensive the options. And not only that, but they don't last forever. As time goes on, they become worth less and less. And, you can get screwed on that. So, what do you do to combat that? So, what do you do to combat that? Well, in my opinion, or at least for me personally, I'll say this because I can't tell you what you should do. I have no idea. I don't know. It's different for everyone. But for me, I found that using LRSI and saying, okay, when it crosses above zero point 0.2, take the loss on a short. When it crosses below zero point 0.8, take the loss on a long. That's what I do. And it is something I've tested extensively, and it works for me. For example, let's look at Triple M. Shows here that it crossed down below 0 0.2 on September 18th. Well, if we look at LRSI here, it's a pretty damn good short. Until when? October 13th. Well, a little bit late, but I tend to agree. I mean, that's a pretty damn good short. Like, let's say, I'm not suggesting this because this is an interesting way of trading, but, and I haven't tested it, but let's just pretend on September 18th you went short. So on the close of September 18th, that's 101.04. Then you covered that position on October 13th on the close. What is that? 88.68? And what is that? Like a $20 gain? That's crazy. I mean, that's great. I don't know. You can play around with this. Look at it. Take a look at if you can find. I don't know where to get LRSI anywhere, but Option Stalker Pro. But if you can find it, take a look at it. Play around with it. Take a look at your losses and note what day you took the loss and see what would happen if you took it right at the close. If you took it right at the close on whatever day it ticks above 0 0.2. Here's a key about it, by the way. On the indicator here, on at least on Option Stalker Pro, I can't speak on anything else, but on the indicator here, this only shows historical print. It will not show you today's print at the close, but it will show you today's print at the close right here. So you can see October 13th was 0.27. For the day so far, LRSI is, what does that say there? 0.36 on Triple M. So that is how to see it on the day. So that's what I look at to make sure that I'm closing it correctly. And I don't know, I've tested this so many times, and there's been so many times where I closed it when I thought it was a good spot to close it, and often for a loss. But when in fact a better place to close it was where LRSI crossed down or crossed up, whatever it is. So that's my thing. That's where that's the it's pretty much the only way I decide to close positions for a loss. Hello. Okay, so continuing the video. Now I'm going to get into some examples of how I've exited these trades because um, now you know my criteria for entry, for exit. Now I'm going to go through it in real time. I'm going to guide you through what I was looking for in these situations. Well, I already went over what I looked for instantly. So that's going to be the pretty self-explanatory part. But I'm going to go through the exits here if I can get my Excel sheet to work, which it is not. So okay, so let's go through some of these. So the first one, like I said before, is McDonald's on okay, McDonald's. So McDonald's was something that I took short on 10-2. So we had a breakdown here. Like I said before, I'll look at a random day. High low, $3, looking for $1.50. Now, here's the thing with options, right? Depending on the delta of the option, also depends on how much of the move you're going to capture. So stock might move $1.50, but you're really only going to get $1.20 on those options. Just depends. Depends on what delta you choose. That's why I try to choose anything between 0.7 and 0.8. Don't go really higher than 0.8, it gets too expensive, and lower than 0.7, you're not capturing enough of the move, really. So that's why I choose that. So on this one, I took a $1.2 profit when the stock moved $1.50. Make sense? Okay. American Express. I took that trade on 10-3. Let's zoom out a little bit, or let's maximize this. I was looking for what was I looking for? I know I don't have it in front of me. I wasn't looking for much, I know that. Just trying to figure out how I based this. I might have even been looking right there. I did close it the same day. Yeah, I was only looking for 45 cents, so I looked at this support level here, and I said, okay. Or I was probably looking for a little bit more than 45 cents, but that's how much I took on the trade in actuality. So I was looking at this support right here on the chart, and I saw that it was consolidating here. That's what I like to see. Got to that level, took profit. ON. ON on 10-3. Close that one 2 days later. 10-3. All right, like I said before, I wanted it below this line. It was below the line. It ended up closing above. I said whatever. Oh, that's too close. Yeah, I probably was targeting this level here, 86.97. I just called it flat 87, and I probably closed it a little bit above 87 because when I have a decent enough gain, I'm not thinking like, oh, let me squeeze every dollar out of it. So I was probably looking for a dollar, which I'm looking at the results right now. So I was looking for a dollar. I settled for 95 cents on the trade. So that was a good trade. ALB. I have here 10-3. I took puts. Okay, let's figure out why we chose that. Doesn't really look like there's anything in recent times, so maybe I did my good old high-low thing. 165, 162. Call it $3. Call it $1.50. 155 below 152. Yeah, so there's plenty of room for $1.50, and that means I only got a little bit over $1. Let me check what I actually got. Shows here that I only took a 70-cent gain on that one. So, you know, wasn't looking for much clearly, but um, some of these exits are a little bit more arbitrary because I'm thinking about especially when I do my thing where I look at the ATR and I cut it in half. I know it's arbitrary, so I'm kind of giving it some leeway in that sense where, if the market's looking not so great to support the position, sometimes I'm willing to take profits a little bit earlier than I normally would be. Plus, I took 3 trades on that day, and that's plenty to make a nice amount of cash. The 3 trades I made on that day, one of them I closed on the day, and the other ones I closed the next day and then the day after that. So all of those provided nice gains for all of those days afterwards. So there was no point in getting worked up about trying to squeeze every last dollar out of the position. You know, Harry from the option stock room has said multiple times, you need to let your winners run and you need to cut your losers short. And, that's not an original saying. Other people have said that too. But it really is contextual. That's one thing about trading is that you can't look at it in you can't look at it in the light of, okay, every rule or every saying or every suggestion is an absolute undeniable fact. I need to be listening to everything. Well, you do need to be listening to everything, but I need to take everything as complete fact, and not really. I mean, everything is kind of an art form, which, for a lot of people who get into this, I've found is we're not really artists. We're more analytical people. So that makes it very difficult because I'm definitely not an artistic person in any sense of it. So it took me a long time to understand and get comfortable with being a little loosey goosey sometimes. Like, my rules are very strict, but, depending on the circumstance, like, you have to be real. Like, that's why when I know I'm doing my method of looking at the ATR, cutting it in half, and saying, oh, that's my profit target, I know that I need to be maybe a little bit more nimble in that kind of a trade because, um, if the market's looking strong and I'm very close to my target, that's still a key because I'm not gonna be up 20 cents and just call it a day. If my target's $1, if I'm up 70 cents and the market's starting to look strong, maybe I'll take that. But if I'm up 20 cents, I'm gonna say fuck it. I'm basically at break even. What the hell? Why would I take that? I'm not getting my money's worth because you know I don't know the data, but I'm sure institutions make a considerable amount of their money from the commissions off options. So I'm not going to sit here and make my broker a ton of money off my commissions and not be compensated for it. Like that's how you got to be thinking about this. Like I need to be making more money than my broker does off me. Or else, what the hell is this for? Why am I willing to pay my broker more money than I'm making off of it? That's the terrible relationship to be in. Anyway, I'm getting sidetracked here. The point is, you need to know when to be strict, you need to know when to be rigid, and you need to know when to be a little loose. It's very difficult to get to that point where when to be all those things, but it's also essential to understand that as well. Let's move on to the next example. So I took triple M puts. Um, what day was that? October 4th. Okay, so I took that when it was more flat here. Let me adjust this. It's a very interesting thing on this one. How did I choose? Maybe I did the ATR thing again. So that's about $1. So maybe like 50 cents. October 4th. Yeah, it looks like I took a 30-cent profit on that one. So it looks like I was looking for about 50 cents. Remember what I said about the delta, causing you to take a little bit quicker gains. Stock might move 50 cents, you only take 30 cents. That's normal. Google calls on December or October 6th. Um, this was a good one. I was looking for just right here. It's right at the top, which I got same day. So that was a good trade. I took $1, slightly over $1. Somehow I took $1.02, which, if you know anything about options trading, I'm not exactly sure how I got that 2 cents, but that's what I have written here. So that's what happened. Next trade I had was TTD calls, October 6th again. Let me see. It's probably looking for something like that. It says I got on 10.9. So, well, it looks like that's right. Took a 90-cent profit on that one. That was a nice gain. Meta calls. Oops, Meta. Was it October 6th? I'm just looking. Yep, it was October 6th. This one, I took profits the same day for one simple reason. I was trading this in here, made money on one trade, lost money on another trade. Retrospectively, well, here's the thing, right? I actually, you know what? I'm going to revisit this after I go through this list of one of my losers. I'm going to review a couple losers because I don't have any this month really. Um, and I'm going to review uh, this as one of them. All right, I'm back a couple days later. Okay, so I was talking before about reviewing some losers. So let me pull it up. I know I was going over Meta. I want to explain that trade. Let me find it real quick. Okay, Meta. So I originally got in this trade on September 14th. So I originally got into it over here. Obviously, we see it's breaking out. I was targeting this level right here with calls. It then proceeded to drop the next day. I'm going to explain why this trade was. I made a mistake and I should have closed it based off of the system I was talking about earlier with LRSI, but I proceeded to not do that, and yeah, it resulted in not so great of a loss. So um, where I should have closed this trade is when this dipped below 0.8. So September 18th, it was at 0.76. And we see September 18th, it is closing right on the 50 SMA. Not a bad place to close it. It's not showing strength anymore. It's starting to pull back. It's really not what we want to see. So that would have been a good exit there. What I did instead was I said, you know what, this has been strong. I'm going to rely on, my perception of relative strength, which I've found for entering stocks, I am exceptional at it. But for exiting, I'm not so good at it. And what proceeded to happen here was there was a event that Meta had that was this big breakdown here, and I committed the cardinal sin of trading. I closed it near the low. What a fucking bummer. I held it all that time, and then I closed it near the low. Then it proceeded to go up. So that was one of the worst trades ever. Not really. Not really at all. But mentally, mentally it was really difficult to handle that. Um, that was one of my losses. Let me find another one. Um, and a lot of these you'll find ways that you can, make a better trade. Okay, so net, I took puts on 921. let's see. So I was targeting this, or not sure where I was targeting, but it doesn't really matter. This trade was a loss. So on 921, I got into this stock, and then as you can see, it never quite returned to that level after the breakdown there, which does suck, but it happens. But so remember what I said before about LRSI? It has to, when I'm on the short side, cross up through 0.2. So that's what happened here. Got to 0.29 on September 28th. I closed it here. Decent loss, not the worst in the world, but you know. Okay, so that's what happened with this trade. Let me find another loser. I don't have many, so. All right, Microsoft. If you were in the Discord, you saw me talking about how I was in this Microsoft put position, and it didn't end up working out for me. So I entered the trade on, let me find it, lost it, on 926. So right there, not bad entry, but then it proceeded to not do what I wanted it to do at all. Fair enough, that happens. And yeah, I closed it on October 5th, looks like. Yeah, October 5th. So that is the day before a big, push through the 50 SMA. So looks to me like I got a pretty good exit on that one for a loss. That kind of stuff happens, and so those are my only losses I took between September 1st and now. Not bad. And you can see how I chose to exit those. So that's what I wanted to go through there. And I just want to kind of give a recap of why I choose to have such strict rule set, where I say, okay, market's got to be here. If I want to trade, I've got to trade below previous day's low. If it's not below the previous day's low, I don't make a trade. Sometimes I'll break that rule, but typically I definitely do not break that rule. Okay, so back into why I have such a strict rule set. So I'm back now. I spent a lot of time editing a lot of the rest of this video. But that's not relevant. Bottom line is, the reason why I have such strict rule set is very simple. So over time, I've been learning this method since around May or June of 2021. Been trading since April of 2020. So 3 years, 3 or so years, whatever it is. Over that time, you constantly try new things. You're constantly learning new things, and you're refining. You're constantly refining. Every single day, you're looking, what can I refine? What can I refine? What can I refine? And through that, there's a lot of times where you learn things. And my strict rule set is born from the process of refining. Every single time I have a extensive Excel spreadsheet. I know a lot of people use TraderSync, TradeView, or is TradeView or journaling software? I don't know. They use a lot of different journaling programs, and they're all great. Don't get me wrong. I have a TraderSync account. I like it personally. I use it more for being accurate within the ballpark of for taxes, really, because I'm a trader status elected with the IRS, so the number that my broker reports isn't exactly accurate because wash sales don't apply to me. So anyway, the reason why I use Excel is because I can do some crazy stuff with it. I have like 11 sheets on the Excel document, all of which are either direct copies of my real-time trades for every single day that I trade with the profits attached to it. And many of the other sheets are variations of my actual trades where I've tested certain theories. And there's, I don't know, let me click on it because I can take a peek here. I've got currently over 1,000 lines of trades in this sheet. And, I have much more than 1,000 trades over my entire lifetime trading, but that's just for, I think this sheet starts in October of 2022. So it's got about a year's worth of data in it. And I have refined and refined and refined and gone over it so many times to try to test different theories. I tested only entering when SPY is above the previous day high. I tested, or below the previous day's low. That's the same rule. It's not two separate rules. Um, I tested that over all the trades. What I did is I went through the whole list. I took the ones that I took the trades I took that weren't fitting that criteria, and I deleted them. I just made it so they never happened. I left the trades that applied to that criteria. Now, of course, that's not going to produce fully realistic, real-time accurate results, but they're close, It's close. And I I did that. I liked the results. I looked at I tested Spy Cloud. I went through all my trades, did the exact same thing. The results were decent. I did testing the profit target being support and resistance. I like that as well. These are just many things that I did to confirm my rules, and then I tested it in real time. After I felt confident enough that it was a valid rule, I never felt confident enough until I went through all of my trades. The reason being is that from October 2022 to October 2023, anyone who's been around for this period of trading knows that things have changed massively month to month in that period of time. Like, in 2022, we, all of the other people who were trading at that time, we all say, this is shit conditions. We all say that. I mean, we would never have said that if we knew what was going to be our conditions now, because this is 20 times worse conditions. I mean, it's horrible. Like we went from being able to confidently take 10 trades in a day, which is crazy to say, to now, sometimes I'm taking one, maybe three. Three is like a lot these days, and that's that's a huge difference. So that's why I tested across all this, because I don't care if I can make something work right now, because here's the reality. If I test just off the last 2 months and I'm like, wow, that's drastically different, and then I go and test, or I go to put that into play in real time, and now um, it doesn't work at all, what does that tell me? That tells me the conditions of the last 2 months were um, were such a way that that method, or that tweak to my method within, Pete's method, that worked in those specific conditions, but it didn't work in the broader sense. I'm not interested in creating a trading method that only works in certain trading conditions. I'm interested in creating a trading method that's repeatable, that I can do now and forever. Now, of course, there's nuance to that. There's the fact that um, you cannot be rigid. Sometimes if you're feeling that something isn't right, it might not be right, and you need to tweak it. So it's just it's really important um, to refine. and to understand why you make changes and to really make sure they're valid. Now, if you're watching this video and you say, well, I only have 6 months experience, I don't have trades from over a year to test. Well, that's why I tell people that really to do this job properly, I think you should be paper trading for over a year before you go to real money. That's what I think, because the reality is that, in 3 months or however long you're making sure that you know what you're doing, you're not seeing enough of the market. Like, there's things that happen all the time. Like, a ton of things that have happened in the last couple of months here, like September and October, remind me of things that I saw last year. Like yesterday, for example, which was yesterday was 10:23. Yesterday, it looked like we might have a capitulation low. I'll show you that. So here we go. Here's the SPY daily chart. So we've got a bounce off of these two lines coming down. We've got, and you got to think of this in context. So this tail was not here until the end of the day when it started selling off. Now, this position, I mean, it was through the 200. I mean, it looked pretty aggressive. I mean, tell me that doesn't remind you of this day right here. Tell me it doesn't. Because I know it does. It reminds everybody of that day. And that's why bulls were trying to buy here. We've got seasonal strength because we're coming into the end of the year, holidays, all that kind of stuff. That's putting the market in a position where it's got that strength. It's got that potential to really take off. Well, during this whole move, I was sitting here thinking, okay, I see the move. But what I was really looking for was I needed to see it hold up during a bearish cycle. So over here, we got a bear cross at 1:05 p.m. and it really never recovered from that. What we should have seen, if this was a capitulation low, and we were going to rally from here and go into the end of the year, which we still could. Don't get me wrong. It's looking bearish today, but hey, maybe yesterday will establish support and we'll just build off from that and then continue up. Could happen. It's not happening yet. We need to see confirmation. But it could happen. I'm not saying that we're going to now crash, but who knows? So right here we had a bullish cross. So I wanted to see this. This is what I wanted to see for the bullish case, that is. And I wasn't particularly bullish, so and I had one short on it, in fact, so I didn't really want to see that. But if you have the mindset of, okay, I'm bullish, what you wanted to see on this bullish cross is you wanted to see SPY do this. Okay, great, fantastic. But then you wanted to see it stack and continue. You definitely didn't want to see a key bar right off the high of the day engulfing half of that candle. That's exactly not what you wanted to see. And then 15 minutes later, you see a bearish cross, and then it never recovered. Set up a lower high, and then just continued to trudge lower. Now, today was the second opportunity for SPY to test that. We again opened right on the 200 SMA, built off from that, even set a new high above the previous day. And I said this in Discord. Pete was saying this in the option stalker room, or else I would have said it in there. But he's been kind of saying everything lately. That's why I haven't had much to say. But I said this in the Discord room. I said, okay, if this confirms above here, if this bearish cycle runs, and we stay up here, I'm a buyer. I'll take longs up here. And as soon as I hit enter, this candle here, this second candle here that rejected and engulfed this breakout candle, as soon as I hit enter, that candle printed. And internally, I said to myself, I knew this wasn't going to fucking happen. I just knew it. That was my gut feeling. Of course, I can always be wrong. Like, gut feelings are based on experience, and you can always be wrong. And, now we're seeing some engulfing candles on the low of the day. Or, well, yeah, low of today. Um, but, it's got a long way to go before it is telling me to get long. We are finally crossing with a bullish cross here. Possibly. I mean, holy hell. How much do I have to zoom in to even see it? It's crazy. Maybe I should. Well, actually, I don't look at it here. But maybe I should make it so I can see it better here. I don't know. It usually doesn't look that awful. But anyway, I don't remember why I got on this topic. But basically, it's that the reason why I have these strict rules is to protect myself, from losing money, to protect myself from picking the wrong direction. Like, I cannot tell you in the past, this really doesn't happen to me anymore. Which, knock on wood, right? But like, so far, it's not been happening to me as much. But let me just show you. So in the past, what would used to happen is I would get something like this happening, and I would have a bunch of longs, I'd get fucked. And then I have a bunch of shorts, I get fucked. So, like, any time the market would pivot, I get screwed, and it would eat away at a bunch of gains. Then I'd have to make them back. It was a whole annoying mess. Now, being more patient and really waiting for it to confirm above the previous above the previous day or below the previous day's low, or above the previous day's high and below the previous day's low, has allowed me to protect a lot more of my gains and take less trades, make more money. I did up my risk, but regardless, um, it's been good. So that's why I have such strict rules. Okay, so this is going to be a super long video. I'm so sorry, but this is the conclusion of the first part of this video. In the next part of the video, or in the next part, I'm going to address the next question that I was asked, which what were some like light bulb moments that really changed how you thought about trading, changed the direction that you were going in. Those are the next things I'm going to address in the next video. I don't know how long that's going to take me. Hopefully not almost 2 weeks, but I hopefully I can get this video out soon. But hopefully that helped. I know it's long, but ask me any questions you might have, and I'll be happy to answer. If I didn't go into enough detail, I might even make another video addressing the additional questions, follow-up questions in this. But hope you enjoyed. Hope this was helpful. Thanks for listening.